Today, Bitcoin continues to stall at the $63,000 level. Crypto firm Consensus sues the SEC over Ethereum regulation. And investment strategist Lyn Alden weighs in on how cryptocurrencies stack up against Wall Street's performance as macroeconomic pressures weigh on investors' minds. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrencies under pressure as we head toward the weekend. By noon Eastern, Bitcoin was down by a little less than 1% at the $63,000 level, while Ether edged lower by 1.3% to trade at about $3,100. Solana fell 3.5% to $142. Today's losses helped push Bitcoin lower for the week, adding to its monthly slide of about 10%. Ether is slightly higher for the week, but still about 15% off its recent highs and pacing for a monthly decline. Okay, let's talk about the top stories. Consensus, a major backer of the Ethereum blockchain, filed a lawsuit against the SEC in order to, quote, defend the Ethereum ecosystem. The crypto firm claims the SEC is seeking to regulate ETH as a security, even though ETH bears none of the attributes of a security, and that it participated in regulatory overreach. The suit also claims the SEC has wavered on Ethereum's classification as a security. The lawsuit revealed that Consensus received a Wells notice from the SEC earlier this month. In that notice, the agency said it intended to bring enforcement action against Consensus for allegedly violating federal securities laws through its MetaMask swaps and MetaMask staking products. By offering its MetaMask wallet software, according to the filing, the SEC believes Consensus acts as a broker and offers and sells securities, even though the software doesn't hold customer assets or carry out transactions. In a blog post yesterday, Joseph Lubin, the CEO of Consensus and an Ethereum co-founder, called the lawsuit an important step towards preserving access to the Ethereum blockchain. The agency declined to comment on the lawsuit. Next, Stripe is bringing back crypto payments by allowing users to accept stablecoins for online transactions. In a post on X yesterday, the co-founder of Stripe, John Collison, announced that the company will start supporting global stablecoin payments this summer. He said transactions instantly settle on-chain and automatically convert to dollars. The company said it's starting with USDC stablecoins and that payments will be available on the Solana, Ethereum, and Polygon blockchains. In a keynote address at Stripe's Global Internet Economy Conference, Collison said crypto is finding real utility and that with transaction speeds increasing and costs dropping, crypto is, quote, finally making sense as a means of exchange. This announcement comes 6 years after the payments firm dropped support for Bitcoin, citing the token's notoriety for volatile price swings and a lack of efficiency in making everyday transactions. And finally, the European Parliament has adopted new rules targeting money laundering. The laws include provisions that allow direct and free access to national registries of financial information. Institutions like crypto asset managers would be required to conduct enhanced due diligence and report suspicious activities to financial intelligence units in the region. On top of that, a new agency called the Authority for Anti-Money Laundering and Countering the Financing of Terrorism would be established. Although the law was adopted by Parliament, the EU Council still needs to formally adopt the rules before they're published in the EU's official journal. All right, going back to markets for our main story. I spoke with Lyn Alden, founder of Lyn Alden Investment Strategy and board director of Swan Bitcoin, for insight on Bitcoin's performance in the face of macroeconomic pressures. Plus, she weighs in on what could drive